Technical analysis is one of the two methods of analysis when it comes to financial trading. Fundamental analysis involves looking at the economic, political, and macro events and analyzing their impact on currencies and stocks. It is a good method that has had significant results over the years. Technical analysis, on the other hand, is much simpler because it involves using tools such as moving averages, a relative serial index, and stochastic oscillators to predict the future price. These indicators are developed by using several mathematical calculations. There are several types of technical indicators. In this video, we will look at unbalanced volume, which is not well known by traders. Hey my dear friends, my name is Polly and you're on Polly Trading channel. Today we will talk about a very popular indicator OBV. I recommend it to you to subscribe to my YouTube channel and follow my releases. Don't miss your chance. What is a unbalanced volume indicator? As the name suggests, unbalanced volume is a volume-based indicator. Volume indicators use the concepts of the volumes to help traders make better decisions. Unbalanced volume is an indicator that was developed by Joey Granville in 1963. He wrote a book known as Granville UK to Stock Market Profits. The indicator simply runs a total of positive and negative volume. A period is usually said to be positive when the close is above the previous close. It is said to be negative when its close is below the previous close. To understand the importance of volume, you need to consider a simple example. Suppose that the price of tomatoes went up suddenly when shoppers were not there. This price could go up, but it will likely come down as soon as more shoppers start to buy. What does the unbalanced volume indicator tell you? The unbalanced volume indicator tells you that the number of positive days are more than those of down days. As a result, it could be a sign that the bullish trend will continue for a while. On the other hand, a volume OBV means that the volume of down days is falling. Therefore, it could be a sign that there are more sellers in the market than buyers. In most cases, traders focus on the trend of the indicator instead of the absolute figure. Therefore, it is recommended that you first look at the trend of the asset and then definitely whether it matches with the OBV indicator. Then look at whether the trend matches with the OBV line. How to use the unbalanced volume? Using the unbalanced volume is a relatively easy process because it is usually built in most trading platforms like the TradingView and MetaTrader. Therefore, you don't need to install it as the marketplace. Second, you need to look at the chart you're analyzing because the indicator is not suitable for all chart types. It is recommended that you use it when the price on assets is trending upward or downwards. As I will release, the indicator does not work well when the price of an asset is ranging. Finally, you need to check the indicator's time frame. When using TradingView, the default selection is the same as the chart. It is recommended that you make this selection since it won't make sense to analyze a weekly chart with a daily OBV. A good example of the OBV indicator at work you can see in this chart. As you can see, the overall trend of the Apple stock price is upward as the OBV indicator is rising. The uptrend starts fading as the OBV indicator starts moving sideways. Unbalanced volume strategy, as with all other indicators, you don't need to know how to calculate the OBV indicator. All you need to do is to apply it on your charts and then interpret it. Also, you need to know that OBV works well on trading markets. Indeed, it should not be used when markets are consolidating. You need to know that OBV works well when it's used in combinations with other indicators. These indicators could be like or moving averages and relative serial index. Now let's observe the practical application of this strategy. I'm eager to open a short trade worth $1,000 immediately, displaying my confidence in the approach. The currency pair in focus is the US dollar against the Japanese yen. Let's analyze the situation. While our indicator indicates a decrease, the chart shows an increase. Whom should we trust? I will clarify the situation by removing the indicator. The indicator we are using is called unbalanced form OBV. It's a freely available indicator on TradingView. Here it is loaded and visible. On closer examination, we observe a constructing scenario. The chart displays an ascending trend while the OBV indicator indicates a descending trend. These diverges amplifies a discrepancy between the trader's behavior and the price movement, often leading to a trend reversal. Currently, anticipated downtrend movement. Let me reiterate the rules for opening short trades based on OBV. Two conditions should coincide: the asset price should be rising with the higher lows, while the indicator readings should be decreasing. In such, for instance, OBV tends to be reliable. To summarize, when the price rises, the OBV decline, it's an opportunity to sell. Now let's observe how this principle worked in the past. It's not just effective in the current situation, but constantly applicable. The vertical lines represent reversal points, so whenever the indicator approaches its descending trend line, I entered that trade when it was close to the trend line. As indicated, the price reached and bounced off the line. In the next scenario, the indicator again approached the line, and the price reacted up with the bounce. The pattern repeated every time, and the price rose and the indicator approached in descending trend line during divergence, leading to downward price bounces. So, by following this method, I could have secured at least 5 profitable trades. And that's just from this chart. In summary, this technique could have ended 5 consecutive profitable trades. It proves highly effective when used correctly. It simply bottom analyzes and enters our compressions of the market dynamics. Currently, our trading platform shows the price is plummeting and the trade has approximately 2.5 minutes left. However, it's essential to exercise caution when applying on its small time frames, as it may occasionally generate false signals. Before implementing it, it's best to experiment with on higher time frames to grasp its functions and trend conclusions. My personal preference is to use it on 10, 15 or 30 minutes intervals for more effective results. Nonetheless, it can be relying on short reversals for experienced traders. Now let's wait for the trade to conclude. Almost there are just 2 seconds remaining. And here are the outcome of the trade: $900 in profit. This impressive return was achieved in just 5 minutes. Earning $900 in such a short time frame is remarkable. The effectiveness of the strategy relying on OBV indicator signal is best observed on sufficiently long time frames. It may not be practical to use on intervals shorter than half an hour due to the higher occurrence of the false signals. The indicator not only aids in the identifying reversal points but also serves to confirm trends. When the price and OBV lines align at the next extreme point, it indicates the continuation of the trend. This presents our opportunity to employ a trend-following approach when buying options. To my beloved subscribers and esteemed audience, I extended my heartfelt gratitude for your attention and support. I'm delighted that you are subscribing my YouTube channel and keeping up with my latest releases. Additionally, I invite you to join my Telegram channel where I conduct live sessions with the subscribers. Don't miss out on this chance, dears. Love you all. Goodbye.